Good morning everyone, and welcome to the PivotBoss pre-market video for Tuesday, July 21st, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We had a significant breakout in the previous session, especially with regards to the 3-day narrow ranges. This 3-day narrow range right here, you can notice right there we had a downside break first, which is our failed new low idea, where price breaks down first and fails and then turns back around and breaks to the opposite end of that range. That's very typical in an uptrending market when you have the narrow range like this and break down first and then slingshot in the opposite direction. Is something we were looking for ahead of time. And again, the fact that we were able to break through the top of that range there and close bullish gave us not only an upside break but also a bullish outside day. And it happened right at the key range high. Very, very significant here, because this key range is something we've been talking about for some time, and the fact that we are breaking through the top of that key range suggests that we could see much more uptrending price action ahead to those upside targets that we specified before, namely 33.85 and 35.38. So right now we have a very, very strong move that could come out of this narrow range breakout and through the top of the key range breakout. Both of those right there could suggest much more upside ahead for the ES and the broader market ahead. Again, the PIMA trigger zone continues to be very, very bullish here. Every pullback into the PIMA trigger zone has been defended. Yesterday's low was right at the 8 period before this thing jumped higher. And right now, the fact that we have pushed away from the key range high here suggests that any pullback, even as deep as that key range high, could still be a buying opportunity for a continuation higher over the next several days. So even if we pull back over the next 1, 2, or 3 days, that could still provide a bounce higher. As of right now, we are still quite bullish. But one thing we don't want to see, especially if you're bullish, is you don't want price to come up here, hit a key level like 3,000, and by the end of the day has closed back below 4-day lows. That would be a significant rejection of these key range highs and could easily lead to a quick reversal back toward 30.77.5. So right now everything looks very bullish and poised for more upside price action, but again, always looking for signs of failure of that move. So right now, very, very bullish. And from the 3-day range, we've quantified it before. That 3-day range here, you can see down here how narrow it was. We're already seeing a breakout to the upside here, and we could see about 110 points of movement on a 3-day range basis. So to quantify that, what we did in our trading room was take this low here. That low basically is 30.90. You project higher 110 points, which is basically that calculation here, and you get 3,300. So at the very least, we likely see 3,300 over the next day to 2 days based on this 3-day range breakout. So 3,300 could be in view by Wednesday based off of our ADR calculations. Alright, let's take a look now at the NQ. You'll see with the NQ, this one clearly led the market higher in the previous session. If you joined us for our Traders Exclusive webinar event last Wednesday, this is the exact same idea we talked about. Remember, we had this rejection day, we had the absorption days here, failed new low, and then we had 3 days of absorption followed by a stop run day and a continuation higher. This is the exact same rejection day trade sequence that we discussed in that webinar, and you can see how it's come to life over the last several days. Very, very solid move. Again, we had a 3-day narrow range here, right? This 3-day narrow range is something we talked about. And look down here how you get compression followed by the expansion of that range. We could see about 570 points of range based off of the 3-day lows. So again, you can take that low here and project higher about 570 points, and you're going to get your upside target. This is something we see quite often and something I point out in our pre-market videos. When you have the 3-day range compression, you tend to see that big move, 3-day range compression, big high volatility move, and we're starting to see that again. Overall, as we've mentioned before, the NQ is in a mind and in a world of its own here, where it's just trending higher. It's leading this market out of this pandemic and keeping everything together for the most part. And you can continue to see how through the previous high, it just has exploded to the upside and continues to honor the trending price action here of the PIMA trigger zone and also the higher value relationships of the pivot range. Just very, very bullish. Again, at some point the trend may end, but until proven otherwise, you've got to continue to look to defend pullbacks in the PIMA trigger zone for a continuation higher. So right now, very, very solid price action here for the NQ. Again, this previous high is going to be very important right there. Can price push through that high significantly and extend this move higher, or do we see some sort of rejection there that can bring us back down? This high to this low and that midpoint there gives us a new key range to work off of. I did have it marked and I will mark it again, but overall that key range right there could give us the upside targets down the road. So right now, very, very strong. I would say even a pullback as deep as 10.8 could still be a buying opportunity for a continuation higher toward 11.3, maybe 11.5 over the next week or two. So right now, very, very strong. Overall, we do have the August effect coming into view here over the next couple of weeks, something we'll talk about for the August monthly market outlook, which is a seasonality effect, but still this market remains quite bullish right now. So as long as 800 continues to be bid here, we could still see further uptrending price action. All right, let's take a look at crude oil here. Now, crude oil has gotten a significant breakout in pre-market, overnight and pre-market trading here. It has not wanted to really get above 41s, and you can see that 41 has been significant resistance throughout the month. And here we are 3 weeks into the month, and you can see we've finally gotten that breakout through 41s. You can see how narrow and the price action was on a 3-day range basis, very narrow. Failed new low yesterday, which led to a nice breakout and continuation today. Something we talked about before was that narrow range could suggest about a 2.5 to 3 point move, which if we can break through 41s could easily take us to 42 to 43, perhaps even higher into 43 to 44, which is where the 200-day moving average is, 43.67. So we could still see a nice move into 43 to 44 ahead. Again, 41s are very important. If price were to pull back as deep as 41s, it could still be a buying opportunity for a continuation higher. Failure to hold 41s could suggest a bit of a rejection like this, which could lead to a momentary pullback of some degree. But right now, this market remains bullish. And just very similar to the way we quantify the 3-day range, you can quantify this narrow range over the last 3 weeks and put in a 10-day narrow range or a 15-day narrow range, and that could give you a much better idea of how far this energy could take us. So right now, very solid breakout through 41s. We could still see a continuation higher. Again, very similar to the ES here. If you're bullish CL, one thing you don't want to see is price close back below 41s today. If price were to drop and close back below 41s, we'd have a rejection similar to this or this, and that could lead to some degree of a pullback. However shallow or however deep, again, if it were to close back below 41s, that would suggest failure of this move, which could certainly happen. But right now, as long as price remains bid at 41s, that could continue to extend this move into those 43 to 44s. Lastly, let's take a look now at gold futures. Gold is up right now. As a matter of fact, the entire futures board that I'm seeing right now is up, except for the dollar, which is down slightly here today. Gold right now breaking through the 1831s, finally getting a move to that area. We talked about how price was likely to get 1831s before, and it got super, super close. We're now through that range. Again, narrow range here that we've developed over the previous 5 to 8 days. We talked about that yesterday and how that range had been holding above 1800, and everything suggests more upside ahead. Now, 1831 was our major target to reach, which was the 50% or is the 50% expansion from the key range high. The next one beyond that is 1957.70. So we could be looking at a continuation toward 1957 as the next major upside target. Kind of the mid target between there would be about 1900. So 1900 here could be the midpoint here before you get to that 1957. But overall, the breakout from this narrow range is very bullish. And again, until proven otherwise, dips are to be bought here for gold until we see those upside targets reached. So right now, 1800 remains bid, and overall this thing seems like it continues to be on a path toward 1900 to 1957. All right, that is it for now. We'll see how this develops heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.